Welcome to the Daily Block, the top events happening in the past day in crypto and why they matter. Fast takes, fewer feelings, more alpha vibes. SEC Chair Paul Atkins signals minimum dose regulation and moves to end quarterly reporting. Paul Atkins published an opinion today, pushing for a much lighter regulatory touch. Think fast-tracking proposals to allow semi-annual rather than quarterly financial reporting for U.S. public companies and an overall pro-business posture compared with the Gensler era. He explicitly telegraphed a friendlier stance toward capital markets and signaled less emphasis on aggressive enforcement. Markets are already pricing in a lower regulatory anxiety premium. This matters for traders because a pivot at the SEC can quickly lift sentiment across crypto equities and token projects, reducing perceived tail risk and boosting risk appetite. The catch: political winds change, and individual enforcement actions will still happen. This isn't a free pass, it's a reweighting of priorities. Next up, the ETF machine is greased. SEC issues new ETF listing rules to speed approvals, and an October altcoin ETF calendar looms. The SEC finalized standardized listing rules designed to streamline commodity-style and crypto-linked ETF approvals, cutting bureaucratic friction and shortening review timelines. That bureaucratic grease matters because dozens of altcoin ETF filings, things like XRP, SOL, LTC, Doge, now have decision windows in October, and the filing queues seem to be moving faster. Issuers smell blood. Index providers and market makers are prepping to pour liquidity into these products if approved. This matters for trading, because faster ETF listings are one of the most efficient institutional on-ramps there is. Approved ETFs can dump enormous liquidity into an underlying token very quickly. The catch: approvals aren't guaranteed, and headline decisions will create volatile, headline-driven moves that can reverse just as fast. Moving on to whale energy. Bitmine Immersion discloses a massive treasury. About 2.65 million ETH, 192 BTC, and $436 million cash, roughly $11.6 billion in assets. Public miner and treasury Bitmine went full acquisitive big boy mode, revealing the largest corporate ETH treasury on record and saying it's aiming to control a material slice of ETH supply. The company's accumulation narrative got repeated across media, and on-chain trackers lit up as observers chased the addresses and staking chatter. That level of corporate hoarding rewrites supply dynamics for on-chain narrative tokens. This matters for traders because big centralized accumulations remove liquidity from the sell side and can amplify rallies or squeeze shorts if the market gets spicy. The catch: companies announce hoarding loudly for optional reasons. Treasury moves, tax planning, and eventual sales are all possible. Watch vesting schedules and actual transfers, not press releases. Quick pivot to derivatives. Gate launches Gate Perp DEX on its Layer 2. Order book Perp DEX with 125 times leverage and CX-like performance. Gate rolled out Gate Perp DEX on its own Layer 2, offering an on-chain order book, a low-latency matching engine, multi-chain deposits and withdrawals, and up to 125 times leverage for BTC and ETH perpetuals. They're promising decentralized custody plus centralized execution speed and have a public beta and trading incentives live right now. It's pitched at pro traders who want DEX transparency without the execution lag of most on-chain order books. This matters for trading because moving high-leverage perp flow off centralized venues changes where funding, liquidation chains, and algo routing live that can shift funding rates and liquidation cascades across venues. Catch: on-chain order books and Layer 2s can still suffer congestion, MEV, and price impact quirks that make 125 times leverage feel like a fast lane to an exit ramp. Back to spot pain points. Bitcoin. Bitcoin reclaims about $112,000 after a weekend short squeeze. Roughly $345 million in liquidations hit traders. BTC popped above $112,000 on a weekend short squeeze that blew up about $345 million in positions across exchanges, with many traders chased out by short covering. Commentary says the move was largely mechanical, shorts getting boxed, CME futures gaps still attracting technicians, and ETF flows acting as a background tailwind. Ether and select alts also rebounded, though ETH suffered ongoing ETF outflows that capped upside. This matters for trading because short squeezes and large liquidations create violent intraday moves, perfect for momentum scalps and catastrophic for chasers using high leverage. The catch: these moves can be deceptive. Gaps and squeezes frequently retrace when the mechanics unwind, so manage leverage and hedge for messy follow-through. Oracle hype incoming. Chainlink spikes to about $21.50 on proof of reserve launches, and and RWA data stream adoption. Link rallied after Chainlink rolled out more proof-of-reserve integrations and pushed its low-latency data streams for tokenized real-world assets, boosting its narrative as the Oracle bridge for TradFi into DeFi RWAs. Volume and social chatter spiked as projects leaned on Chainlink to provide on-chain verifiable feeds for assets, custody, audits, and settlement primitives. It's a clear product adoption story, not just hype. Markets rewarded the on-chain utility. This matters for trading, because tokens with real adoption vectors, like Oracle demand and RWA feeds, can see more durable inflows than pure narrative alts. Catch. Token price depends on monetization dynamics and long-term demand for Oracle ops. Adoption takes time, and headline runs can reverse if competitors or tech issues appear. Shift to layer 1s and meme coin flows. Cardano posts a death cross on short time frames, and big ADA holders appear to be reallocating into Remedix presale. Cardano's 4-hour charts just printed a death cross, and that technical weakness seems to have coincided with on-chain signals that some large ADA wallets are rotating into Remedix, a payments/PayFi presale that claims big presale raises and 30K verification. The narrative is classic. Whales trimming a large cap L1 into higher beta presale ticketing, chasing returns outside the liquidity-congested majors. Remedix's presale buzz and vesting terms are now something traders are parsing for potential pop and dump risk. This matters for trading because whale reallocation into presales can spark altcoin micro-seasons where small tokens run hard and dump harder. Tracking wallet flows and vest schedules can give you a heads up. The catch: presales are high fraud and high volatility by design. 30K doesn't equal guaranteed price performance. Investing cliffs can turn a moon into a crater fast. Last one, a little risk management tech. CoinStats integrates Hecken's Glider token risk scanner with more than 22 smart contract risk checks. CoinStats added Hexen's Glider tool to surface deep smart contract red flags, centralized mint or burn controls, hidden fees, blockable transfers, upgradability smells, and other common rug pull vectors. Across EVM chains, now available in their Degen tier. It's essentially a pre-trade X-ray for meme coin snipers and pre-sale dabblers who want to avoid the obvious traps. Early users say it catches many dumb honeypot and rug patterns before you hit buy. This matters for trading because fast on-demand contract risk scoring is a practical control that can save a lot of capital for retail traders doing snipes or pre-sale hunting. The catch: no scanner is perfect. Sophisticated scams and social engineering still get through, so use it as one guardrail, not a seatbelt that replaces due diligence. That's the block for today. Subscribe for the daily chaos, charts, and questionable life choices. Hit the bell so you don't miss the next squeeze. That's today in crypto, where the gains are imaginary and the pain is real.